Okay, hi everyone. Thank you for sticking with us. And trust me, this is going to be a very exciting panel. And I am very excited to be moderating this panel, especially with such distinguished panelists. So it would be great if we could just go around and if you could all introduce yourselves for the audience.
I'll start. Do you want a microphone? Oh, you got a microphone.
Okay. My name's Ted Dow. I work at Paddington Street Finance. We invest in companies backed by the R&D tax incentive and straight corporate cash flow loans. Once upon a time, I helped start up a small business, $30 billion capital called the Clean Energy Finance Corporation. And I suspect that's why I'm here to talk about the future of energy. Nice to be here.
Hey guys, you just heard me. My name's Alan Hunter. Very relevant to what we're doing about the future of energy.
Hi. Hello everyone. My name's Chris Flavell. I'm Managing Director of AraCapital. We're an active investor at the early stage in climate tech companies, resource companies, and providing debt and equity capital advice.
And Paul Geason, you also just heard from me, CEO of Wave Swell Energy. I have about 8 years experience in the energy sector here in Australia, and before that, a range of roles in the IT and telecommunication sectors here in Australia and the US.
Perfect. Thank you so much for those introductions. Now, Ted, let's start with you. So with your extensive experience in funds management and banking, how do you see the role of private credit evolving in the funding of emerging technologies within the renewable energy sector?
So I might be a bit like a politician here and answer a slightly different question than the one you asked. So if I could expand, I shouldn't have said that. I failed in my being a politician test, and you just weren't supposed to notice. So I'll start again. If I could extend that question to the whole private capital sector.
Yeah.
So not just private debt, but also private equity, venture capital, basically non-public markets, unlisted assets. The job of that sector of the economy is to be much more nimble, to shine a light on the sectors that are misunderstood, mispriced. Really don't get any oxygen. And at least I personally believe that the job of private capital is to help those sectors grow, to help to bridge them to the point where they do become of a bit more interest to conventional investors. And in doing that, we should be generating higher returns for our investors. Our investors want a little more alpha than people in public markets do. They want a little bit more excess return. And that requires a higher level of intestinal fortitude because you are taking more risk. And basically, if we can bring those companies into the mainstream, then the big ticket investors who have a lower risk appetite and generally want large cookie cutter transactions that they can do at scale, then we've done our job well. So we're not hugging the index. We're not buying IBM. That's not our role. And certainly renewable energy right now, it's a very, very fast moving sector of the economy because of the transition that we all need to go through. We're not transitioning fast enough. And private capital, if you look at the deployment in the world, it's doing most of the heavy lifting in terms of funding that transition. So that's more or less how I see it.
Amazing. That was actually a great answer. Now, Alan, considering NRN's innovative approach, could you share some insights about addressing challenges in developing financing models for distributed energy resources?
Yeah. So, I work personally a lot with energy retailers. They have a big job to play here. We've enabled, as I said in my first word, I said we did it wrong. We let 3.3 million homes in Australia buy energy assets for their home and be on their own. And now we're in a really bad state, Australia, to we call this the duck curve in the energy sector, and we're in a lot of trouble. And I think there's a bigger role for energy retailers to play here, not just around financing assets for individuals to be on their own. We all need the grid. We all need to work together, and being isolated, we just don't feel is the right way. So, we've always had this supply chain, as we all know, from generation, transmission, distribution to the home. Whereas now with the generation being at the home level, retailers need to look at better than financing, and it's financing themselves. It's looking at how do they look at generation assets behind the meter from a distributed energy resource lens, rather than looking at just large scale generation. And that's the challenge that they got to face now, and it's great to watch Australia. We are leading this. We're facing problems countries will face in 5 or 6 years' time, and I know that other countries are looking at us doing well. How can they do it better and avoid the problems that we have today? So, yeah, I think instead of looking at individual purchases, individual finance, retailers need to look at how they are financing their generation book, but not just at utility scale.
Absolutely. That's a very key point. Now, Chris, building on the discussion of emerging technologies, what do you identify as the most promising renewable energy solutions for the next decade?
I think the interesting thing is just to look at the existing energy infrastructure network and look at the fact that it's 100 years old. It's designed to be central coal-fired power stations going in one direction from the grid through the energy retailers down to the home. We're only now emerging and seeing these transitional issues that come to rise in a country that is blessed with a huge amount of sunshine. So for me, solar has now got to the point clearly where you can do grid-scale generation or at 5 cents a unit. Smaller residential, it's about 8.5 cents a unit. This is in comparison to what you would normally be paying through your retailer for 20 cents a unit. So there's economics are driving solar installation, and the solution to how that is repackaged through an NRN, or whether you're storing that in a battery and then using it for the times when the sun's not shining, or using your hybrid car or your EV to plug in and back up. All of these solutions are driven now through a large amount through economics. PV solar panels have come down so much that it's basically no longer an economic decision to, for times when the sun is shining, it doesn't make any sense at all to be taking energy from the grid. So therefore, the redesign of the system and what that means in terms of grid redesign, in terms of community batteries, in terms of behind the grid batteries, this changes everything. Then you have a whole series of emerging technologies around wave technology, around going as far as fusion, but there's a whole bunch of new emerging wind turbines that bring power down. So it's such an exciting sector, but trying to pick the right winner is very difficult, and that's why the private sector is such a difficult role to play. Yes, so which technologies? I don't think anybody knows yet. It's what's great to see is just that there are so many new ones that are coming through that are being supported by Wholesale Investor and hopefully by people who are passionate enough about impact investing.
Perfect. That's a very good point. Now, Paul, how do you view the collaboration between private entities and government initiatives in promoting sustainable and innovative energy solutions?
Well, I think the relationship between private and public in that sense is incredibly important. It's essential. I think even as Chris has alluded to, when you are a new and emerging technology innovating in the way that we have, the relationship we have with government is absolutely critical. Wave Swell depended very heavily on a significant grant from the Australian Renewable Energy Agency right at the outset to deploy and actually trial and test our technology. That was incredibly important for us because it spoke volumes to the private sector in terms of a level of confidence that our project would indeed get underway and would succeed. I also think the rigour that came with that was incredibly important. I would also note that from an R&D perspective, just how important the R&D rebate has been to an emerging startup innovative business. It is very important to cash flow in those early stages of a business. So that's a very, and that's very much a Wave Swell experience. I think when you actually come to commercialise technology and you move beyond that initial trial and testing and proving a technology, getting up to technology ready level 9, it then becomes a question of commercialisation. And again, I think when you as a new technology are competing with the established mature technologies of solar and wind and storage, it's important that government can support new technologies with very clear signals in terms of support. We see countries around the world in the wave energy sector, for example, where governments set targets for the deployment of those technologies. They also, as has been the case here in Australia, there are significant capital and revenue subsidies. But we're not really about, I don't think private wants a free handout as such. There's certainly those initial benefits that come, but it's actually the signalling again to the private investor community that these technologies are here for the long haul and have a role to play. The other, and I'll finish here, the third point I would make is sovereign supply chain, independent supply chain is also something that I believe is the responsibility of government to support. And I believe we have that here in Australia, that if we do invent in Australia, then it's incredibly important we have the support to build world-leading industrialised supply chain capacity to ensure that all the benefits of the development of those technologies remain within our country.
Yeah, absolutely. That's a very good point, Paul. Now, Ted, coming back to you. So drawing from your leadership in the Clean Energy Finance Corporation, could you share some insights on how sovereign wealth funds can effectively drive the adoption of renewable energy and decarbonization initiatives?
I think Paul just said it very well in terms of a case in point. So you have the Clean Energy Finance Corporation. You also have the Australian Renewable Energy ARENA. So those are government organizations, and you look at the impact of ARENA and the R&D tax incentive upon Wave Swell, and it sounds like it's been pretty profound. It's made the difference between existing and not existing. But more broadly, I think it's, in my opinion anyway, sovereign wealth funds have superpowers. You know, when they have a mission-critical purpose, and it goes beyond generating a profit, albeit CFC is a profit for purpose agency. You need to form deeper pools of expertise that you generally don't see in the private sector. And in forming those deeper pools of expertise, you're able to go where the private sector doth not tread for fear of losing capital. And in doing that, again, you can show that investing in merchant wind farms or merchant solar farms or storage, places where the private sector hasn't invested before, or wave energy, you can establish a successful textbook of good investments. And then very, very quickly, you find that the private sector follows. They chase the profits. They chase the excess alpha, the excess return. And it builds its own momentum. It catalyzes the industry. It stimulates the industry. CFC started out with 10 billion, has 30 billion today. Sounds like a lot. Another example is the UK Green Investment Bank. That was taken over by Macquarie a couple years back. Today it has something like 150 billion under management. So that's just grown and grown. Another example is the Norwegian Sovereign Wealth Fund. It's 1.4 trillion, owns something like 1.5% of the total market capitalization of all stock markets in the world. What's ironic about that fund is it was funded by North Sea oil and gas revenues. But what are they saying to all of their investees today? You must decarbonize. You must have a plan. If you don't, we will exercise our capabilities as an investor to vote you out and vote in a board that is maybe not male, stale, and pale and actually has a plan for decarbonization. So these are the sort of things that mission-critical sovereign wealth funds can do. And it's not a new model. I mean, if you go back through the years, we have export credit agencies to stimulate exports. We have our own in Australia, which used to be called EFIC. What is it? The Export Finance and Insurance Corporation has a long history of success and profitability. If I turn back to the CFC, the CEO at the CFC was just named as one of Time Magazine's top 100 climate advocates in the whole world. That's a big accolade for a small country in Asia, but we have it. And that's an example of what sovereign wealth funds can achieve if they're set up the right way. Because the other thing, going back to the sort of jokes about politicians, what's very, very difficult about a sovereign wealth fund is you need to be sure that it's established with private sector principles in partnership with the private sector, or else it just becomes a great big exercise in pork barreling for whoever constituency is around. When we're at the CFC, we did get calls from the Prime Minister's office saying, gee, why didn't you invest in this technology? That wasn't a lot of fun, but our board, private sector people, their own reputations, they stood their ground. And that, in the end, created a very successful model that the government's tried to emulate many, many times over. So that's my view on that. I think that was a wonderful entree right off the bat by Paul, though. I don't think I could have said that any better in terms of a case study and what governments can do and sovereign wealth funds can do.
Yeah, absolutely. Completely agree on that point. Now, Alan, coming back to you. So it would be great if you could share with us, how do you foresee the role of private credit evolving in the funding of emerging technologies within the renewable energy sector?
Good question. Look, as rightly as everyone just said here, there's that big role to play at the very beginning to demonstrate they come out that emerging to being just a technology that's the day-to-day side of it. That's the role that they play. In our company, we've taken the benefits of R&D. We have STCs, which is another carbon credit that we have in place in Australia. There's, again, it's getting these emerging technology or emerging business models like us off to the ground where then we look at different types of capital structures. I haven't got too much to comment on that question, but I think it's broadly been spoken here on the panel.
I understand.
You just want more money from them, though. That's what you want to say.
Pretty much, yeah. Yes, shortly. Look, there's a big role that they need to play, fundamentally, just to get us get emerging tech to that next point.
Absolutely. Now, Chris, moving on to you. How do you balance the need for equitable investment partnerships with the urgency of advancing clean technology and renewables? Like, any thoughts if you could share on that?
I think this comes back to kind of the ethical investment and the big swing that's happened globally and locally in terms of sustainable investments and ESG investments and other things. But I mean, first of all, perhaps if I can just sort of pick up on the private credit issue that, for Alan, I think certainly for me, looking in from the outside and from investment banking experience, one of the big things for the renewable energy sector is about driving down the cost of capital. So it's about being able to get lower cost capital, bringing debt capital in at an early stage, as early as possible, to be able to drive down the cost of capital. So you're not borrowing at early stage startup rates of return of 30, 40%. And it's balanced with the ability to have debt capital that comes in at despite bank interest rates today, 10, 15%. So that's necessary because these sorts of businesses, grid businesses, infrastructure businesses, are capital intensive, and otherwise you just can't afford to get off the ground. So no matter what you do with R&D credits and other things, it becomes incredibly hard. So getting to that minimum viable size and product, and then being able to categorize that so it can be financed and rolled out, similar to car financing. I think that's what's important in terms of the different roles of different types of private credit, and NRN's managed to tap that in terms of this new $10 million facility as being the first phase to come through and help take that forward.
Perfect. Thank you. Paul, how do you see innovative financing models, especially in the context of private credit, contributing to the growth of wave energy and other emerging technologies in the renewable sector?
In general, I would say I think it will make a significant and growing, well, certainly growing and then significant contribution. From our perspective, and I've obviously just made a pitch for $4 million Aussie in private equity investment. We are, to put that in the perspective of an emerging infrastructure technology business, we are pre-revenue. So when we do talk to private credit or otherwise, that's something, as it would be if we were talking to a major bank or others, we're very cautious in terms of the exposure that we take on for our business. That said, we have had instances where we've been able to use private credit lines to address issues in terms of cash flow and been able to secure that in ways that have been important to the business. So certainly going forward, I think where banks balk, I do think that there is a significant opportunity for a role for private credit in the mix. It gives us a level of flexibility, but again, it's also something that as an emerging business, caution needs to be exercised.
Yeah, absolutely. Now, for the next question, I'll just open it for all of you. So anyone would like to answer it. So let's say that looking in the future, like 5 years ahead. So how do you envision the landscape of renewable energy investments evolving? Any thoughts that, any of you could share?
I can jump in there. Look, I'll come more from the energy side of it, like where I see the energy future in the next decade is moving purely towards energy management, making sure everything's in sync. Renewable is such a hard generation asset to create a base load for our country. So the requirement for virtual power plants and the technology required behind there, the asset or the infrastructure being deployed, such as solar, such as batteries, such as wind, and all the other renewable assets. Like there's a huge requirement for investment in the infrastructure component of there, and then of course the technology that enables all of those assets to start working together, which is very different to what we're used to. We're used to just having a large generator at the end of the supply chain, just generating a very steady base load and not too much controls that need to happen. Whereas now in Australia, we just move into a 5-minute market. So we really need to measure the supply demand instantly and get these assets to work in accordance with the other variables that we've got to take in consideration, such as the sun, when it's cloudy, the wind, and all the other factors that come into it. So yeah, I think there is a huge requirement for investment on the infrastructure side, yes, but a lot on the technology side to make sure we can keep the lights on.
Yeah, definitely. That's a very good point. Yes, Ted.
I would completely agree, and I think I think of it as the orchestration software because our grid is so complex. But I'd also throw in a few others. As part of that, look up a company called Energy Exemplar. I think we've all read about it. It was a Riverside private equity investment, just divested to Blackstone, I think. I'm going to say it was probably like a 14 times return. It's hard to do the numbers, but 1,400% return. What does that company do? They're not part of the orchestration software, but it is a modeling and simulation software for grids. So it untangles this complication, this intensely complicated grid that we've created for ourselves. That was something I hadn't thought about, but when you think about it and you see how well it's done, you go, of course, that makes sense. We need that because it's so much more complex. I could chuck out a lot of answers, but there's one that we never think about, and that is the developing country play. So in Australia, I think we're, in terms of generation hours every year, we're 180,000 gigawatts, something like that. Over the next 20 years, that load's meant to grow about 5 or 6% over the next 20 years. It's not a growing market. Take China, for example. China's an 8,000 terawatt market. It's growing at 6 to 8% per year. So every year, they're installing the equivalent of our entire installed capacity. So there's a great big play for you. It's not about technology. It's about demographics. It's about industrialization, electrification. I think over the next 3 years, China, India, Southeast Asia, they're going to speak for 70% of the growth in power demand. So you want a place where the rising tides might lift your boat? That's not a bad place to look.
That's indeed very thought-provoking. Chris, Paul, any thoughts from you guys?
Look, I think, in a sense, building on what both Ted and Alan have said, and I really wanted to try and not say wave energy when I do this, but the diversity. I think when I think about that future energy system, and we grow independence on intermittent sources of energy, it has got to be the case that we have to, as a society, embrace every source of energy we can. And by doing that, not only deliver up net zero. I think at the moment the belief is we can get to net zero through wind, through solar, firming that with storage. And just getting to net zero is not the only assignment. We need to have a reliable electricity supply, and we need to have affordable electricity. And I think that can be achieved by leveraging all of the diverse resources that we have, the uncorrelated nature of those resources, and by doing that, actually deliver up affordable and reliable electricity without the current projected demands for firming in the way that they are sort of currently stated. And I think we hit the trifecta. We get to clean, we get to reliable, and we have electricity is affordable.
Chris?
Yeah, I think the roadblocks to that vision, Paul, I think really are just, there are still things that are as simple as the regulations that exist for being able to feed your EV back into back into your own house. So despite the relatively small penetration of EVs in Australia, none of the cars, EVs currently, actually are bidirectional in terms of what's able to be done. So and South Australia is the only place that's actually put the right regulations in place, and the percentage of cars are very small. So these sorts of regulatory changes need to be put in place, and then the new business models that will actually drive the economics. So things like retailers picking up the assets and redistributing the assets, the sovereign wealth funds providing funding down to much smaller packaging for different grid solutions. Being able to, virtual power plants that exist in different places, being able to own solar PV panels on, actually invest in a solar PV panel that sits on somebody else's roof. There are a whole bunch of different solutions that are there, that are emerging, coming through as ideas, and it's really just being able to have each of those get sufficient oxygen, that it gets supported, and so we can have that multiplicity of solutions to give us the right outcome.
Well, I guess that this is a great note to end our panel on, because we are coming close to the time. So I would like to please tell our audience that please join me in thanking our distinguished panelists for their invaluable insights and expertise. The future of energy definitely looks quite promising. And all the topics that we have discussed here today, it's really thought-provoking. And I really want to thank you all for joining us on this panel session.